Hello, everyone, and welcome to another edition of BullionStar Perspectives. Today, we are honored to have with us Corey Keller, who is with Keller Consulting, which is a specialist gold refining company which advises on designing and building gold refineries around the world. Corey has spent over 30 years in the industry, and he has worked in 5 different continents and done substantial work in the United Arab Emirates, in Dubai, and in Abu Dhabi. So, Corey, great to have you on the show. I think you'll really add a lot to the perspectives on what actually goes on in the gold refining world, and we're intrigued to some of the questions that I've got lined up. I think our viewers will be very happy to hear from you. So I started looking at gold refineries, I guess, about 8 years ago when I was looking at the Swiss gold refineries. So everybody really knows about the big Swiss gold refineries, but less so smaller refineries around the world. And one thing that struck me was that the gold refining sector is actually on the front. It has a front row seat of what goes on in all of the gold sector, because if you look upstream at the gold mining sector, if you look downstream at the clients, the bullion banks, the physical flow, the gold refining sector really knows what's going on as regards physical flow, clients up and downstream, and cross-border gold flows. So would you say that's a correct perspective, that the sector really sits in the middle of everything?
Well, first of all, thanks, Ronan, for having me on. BullionStar is absolutely my go-to every morning, just after my coffee. So thanks for having me. Absolutely, the refineries, both first-tier LBMA and the second-tier other organized refineries, have a front row or center row seat in what's going on. The only people that probably know more would be the transportation companies, because they know where the landing strips start and where they stop. So yeah, we're both the transportation industry like Loomis and Brinks are probably the only people that know more than us.
And would you say right now in the global refining industry that there would be overcapacity or undercapacity in a big picture sense, or really does it depend on the country and region, that there might be overcapacity in one parts of the world, but undercapacity in another, and the fact that refineries have to be located close to, in some cases, the markets upstream and downstream, that you can't really say whether it's in overcapacity or undercapacity?
Well, gold doesn't get jet lag, so it doesn't care how long or far it flies once it gets on the plane. You're right in saying that regionally, there's advantages to having gold refineries close to the source. There's also an argument to be made on the corporate side to have refineries close to the market. At the end of the day, organizations like the LBMA want to push it towards an area of control where the banks can look at it, touch it, feel it without it going wrong. At the same time, there's countries like Kenya or Thailand that also want to be able to touch it and tax it before it leaves the country. So there's a lot of reasons to have a gold refinery, whether it's registered or not registered. So there's overcapacity in a lot of regional areas, and undercapacity in a lot of regional areas, and overcapacity in a lot of the places like Switzerland and other New York and that sort of thing.
And what percentage of throughput volume would really be needed in one of those big gold refineries, like in Switzerland, that they could remain profitable? Like, for example, they claim maybe they could have 400 or 500 tons gold refining capacity per year. But if they're only using 50, 60%, are they still able to generate a profit, or is there some type of equilibrium point at which they have to
I'm no economist, but I do know what the costs and expenses are to run a gold refinery. But you really need an economist to answer the question, to examine the situation. There's the difference between fixed cost cash flow and depreciation when it comes to this sort of thing. If you're going to spend $20 million building a refinery, and now it's built and there it is, you're going to need X amount of kilos through the door a day. I will say that I've been at refineries, the larger refineries I've worked at. We need about 250 kilos a day coming through just to pay our nut, to pay every employee and our lighting and our chemical costs. 250 kilos on the very largest refinery I've had. That was a 1,000-kilo refinery, so you need to be about 25% full just to pay your bills.
Yeah, and
the rest of it's not profit. The rest of it all has expenses too, because you've got financing costs on top of that. So if you're running 750 kilos through that refinery, you're also funding or financing or paying the financing on that.
And you mentioned just a minute ago about the London Bullion Market Association, LBMA, and they market themselves as the global authority on gold and silver refining in the world. And they have what is called the Good Delivery List. And for people who don't know what the Good Delivery List is, it's a list of refineries that have been approved or accredited to produce 400-ounce gold bars or 1,000-ounce silver bars. And this list has been around since, I believe, 1750s, when it used to be administered by the Bank of England. But then when the LBMA was set up in 1987, they took over the administration of this list. But when you look at that list, although it includes a lot of different refineries in countries around the world, it's not really representative fully globally, because it excludes it excludes all the refineries in Dubai and Abu Dhabi. It excludes nearly everything in India except for the MMTC PAMP joint venture. So what's your view on the fact that the LBMA is really in control of this list, and that it doesn't include everything around the world as regards refineries?
Well, not to dodge the question, but to put it in perspective, the DMCC, which is the Dubai Multi-Commodities Exchange, has something called the DMCC listing, and their certification has the exact same standards that every refinery has to go through. I was able to register one of my refineries through them, and they helped me. They didn't discourage me. And at the end of the day, at the end of the day, look, I feel originally I think the LBMA had a great idea, and I think they're exclusive and not inclusive currently. And that's why those refineries are left out, because they're being exclusive. If you want to join, you have to really pass a high bar. Whereas the DMCC, with the same standards, helps you to go over that bar.
So I could see where maybe if a refinery isn't producing 400-ounce gold bars or 1,000-ounce silver bars, then it wouldn't, by definition, want to be on the list, or couldn't be on the list, because it isn't producing that particular product. But for example, India is one of the biggest gold markets in the world, and there are quite a lot of gold refineries in India. But the fact that none of them, apart from the PAMP joint venture, is on the list, that seems to be, and as well with Dubai, it seems to be that there might be some sort of political maneuverings and decisions going on behind the sines that isn't just purely based on technical qualifications of refiners.
I don't know if it's political as it is protectionism within the group. I'm sure you're going to ask me later, for example, about consolidation of gold refineries, and that's what it boils down to. Look, when I run refineries, I can turn a kilo bar machine into a 400-ounce bar machine in a induction thermos tunnel in about 5 ticks, and a really great engineer, and make them. There's no reason for me to make them in the Middle East, because everyone wants kilo bars. The kilo bars go to customers because kilo bars is what jewelry manufacturers can afford, and so that's why we make kilo bars. If they wanted us to make 400-ounce bars, we'll make those too. If we were trying to qualify for an LBMA certification, it's easy. Because we already qualify for DMCC, and the DMCC's qualifications are exactly the same.
So would that in future, in your view, allow a competing organization, for example, the World Gold Council, to come in and say that they're going to administer a similar type of list that the LBMA administers, and actually go into competition by accrediting their own refineries And so then there would be, in essence, two lists competing, and that one could even take over from the LBMA, either through commercial attractiveness or else convincing the regulator that that second organization is a better administrator.
I see where you're going. Look, I've got a lot of love for the LBMA. They've done a lot of great things in the industry. I think that they've put a lot of great things forward and have administrated what they administrate very well. The World Gold Council seems to be really more involved and got their fingers right in the mix, where things are more important and where they activate change rather than suppress progress.
Yeah.
And I'm not going to push that on anybody, but that's what I've seen worldwide. And I've been on 5 continents doing the same thing and seen it all. I think there is room for someone to come in and say, I'm the new gold master, and this is going to be a rule or a protocol that you have to join up to, and you'll instantly be trusted worldwide. At the end of the day, what it comes down to is the refineries doing a good job building their own reputation and building their client base. But right now, unless you're LBMA registered, you can't deal with the big boys in Rio Tinto or BHP or those guys, because the first line of every RFQ is you must be LBMA registered to bid.
And do you think in some ways that maybe the LBMA shies away from approving refineries in countries that maybe in the media have not such a good reputation for maybe sourcing gold in places that the public look as a little bit suspect? For example, some of those NGOs like Raid Group and Global Witness every so often come out with a report, and they're saying that maybe it was Dubai or an Indian refinery. And these NGOs are not really NGOs. They're sort of non-for-profit, but they're backed and funded by trusts and governments. So, and they're based in London and Washington and places like that. So do you think that sometimes there might be political pressure being funneled through by bullion banks into those Global Witness and Raid just to target, say, Dubai or India, because they just don't want them, as you said before, they want to protect the existing establishment?
Yes, let me check my notes on this, because I wrote something about this specifically, because I thought you were going to ask me this question, and my answer is yes. That's
so
it.
Yeah, so
yes.
that sometimes
they are absolutely politically motivated. They absolutely do not want mining. They don't want fossil fuels doing anything. They don't care about innovation or reclamation or zero discharge facilities when it comes to gold or oil or any kind of mining, even in base metals. They don't care. It's evil, and that's their stance. And so the answer is yes. I think they're political and should be discharged with the vigor that they attack the industry with.
Okay, that's a nice, succinct answer. Speaking of the LBMA, everyone who's been on the show recently, I've asked them pretty much the same question, and because it's a very important topic, a development that's happened this year, beginning in late March, when the COMEX gold futures price diverged from the London spot price, and that kicked off or triggered the beginning of a huge inflow of gold from all around the world to New York, into the New York vaults. And that in turn triggered a lot of deliveries via COMEX futures of gold changing hands within those vaults. What do you think actually created that rush of gold that went into New York beginning in late March and continued all the way really until September or even now?
Okay. Because nobody thought that anyone in COMEX would ever want delivery on actual physical delivery of the metal that they were trading. I used COMEX a lot through my different refineries and the different trading companies, and I would never ask for delivery or have to send delivery. But when the economy tanks and you've got a US election coming up and you've got a pandemic, it's a good idea to get your hands on some physical. And the COMEX realized that I don't know what the COMEX realized, but they needed to find physical because they knew they were probably short if everyone pushed for delivery.
And do you think they knew in advance? Because it seems as if even from late March, the LBMA and the COMEX CME group came out with a joint statement saying that they were going to make sure that the delivery obligations in New York were fulfilled. But they said that in late March, and then all the bullion banks started sending a lot of gold from everywhere, Switzerland, from Hong Kong, from Australia, across to New York. So do you think that there was just really an inclination that this was going to happen, that the delivery notices were just going to pile up?
I think that's probably very good planning, because I can tell you if COMEX falls, the London bullion market falls at the, shortly after. It's the COMEX is the Lehman Brothers of the collapse of the global bullion bank business. If they prop them up and Lehman never falls, we don't have 2009.
Interesting. That's a very interesting way of looking at it. And that reminds me of something that happened at the end of July involving both the LBMA and COMEX. Just to put a little bit of background into it, the LBMA has always had their good delivery list, and the COMEX has always had its accredited refinery list. And the COMEX list was always quite small, maybe 70 or 80 gold refineries, I think a little bit less for the silver refineries. But at the end of July, in a very stealthy way, the CME group announced that COMEX had mass approved everything on the LBMA good delivery list, including gold and silver, and including everything current and on the former list. What do you make of that mass approval? Do you think that it's just creating a larger potential supply for COMEX, or do you think that they're going to be aligning their trading and delivery in future?
Well, if you want to buy silver coins through the US Mint right now, what do you think your waiting time is? I'm guessing 8 months. You can give them the money now, but they can't deliver for 8 months. That's the US Mint that actually mints silver coins. So in COMEX, COMEX is where that metal gets traded through. So you've got to think that's the bottleneck. They're trying to push as much metal as they can to meet demand, including probably leased metal or triple leased metal into that funnel. To get the physical out to people that want to buy it. I think at the end of the day, there's not enough physical out there for the people that want and have the right to, through contract, have metal delivered.
I know you said recently that the home for physical in the future will not be New York or London. What did you actually mean by that? Where would you say in the future physical will trade? And could it be on a physical exchange where price discovery is created not by paper trading of gold futures or unallocated gold in London, but actually physical supply and demand trading?
Yeah, so I'll clarify that. Look, there's always going to be a home for gold and silver in London and New York. Absolutely. Banks depend on it. Banks bank out of London and New York and other places for Western culture, if you will. But I'm thinking that in that statement, for context, I'm thinking that places like Singapore and Southeast Asia and China and the Middle East do not need to go through that route anymore. They don't need it. They've been suppressed so long that they've actually invented their own way to trade physical amongst themselves because they're not getting registered. They're not getting on the list. Their gold has to go through someone like Metalor or Asahi or Valcambi in order to get it to the bank, and that's just extra cost. When you're already paying 52 cents to armored carrier to get it across the ocean, then you have to pay 35 cents to a company like Valcambi to have it turned into their bar and their label to get it to the bank. There goes your profit. They don't need to do that. There's already enough demand and supply in Southeast Asia, the Middle East, and India to have their own gold market. I don't want to use the word decoupling, but they could decouple if they wanted.
And would you see Singapore, because with BullionStar based in Singapore, a lot of our viewers have a personal localized interest in Singapore as well. Singapore, since 2012, the gold hub has really come on. But do you think it has a lot more potential? And there's only really 1 or 2 refineries there, Metalor, for example. Do you think that Singapore is a market which could attract the building of new refineries to serve the Southeast Asian region?
So I can't speak to Metalor directly because I used to run their US operations, but they run an excellent operation in Singapore. That's great, but it just feeds the monster back in Switzerland. That's all I can say about that. It's really not recirculating back into Southeast Asia. They're absolutely the financial base, the sophistication of Singapore investors, the appetite for gold and physical silver, physical gold and silver is immense. And Singapore is where everyone wants to go do business because we don't know about Hong Kong right now.
Yeah, exactly.
I don't expect to be an expert on Hong Kong, but I would, if I was going to move right now, would I move to Hong Kong or Singapore? I would pick Singapore 100 times out of 100.
Would you say that Singapore would be the natural choice if a regional gold hub was going to take over the lead from New York and London? Like Singapore has a great security infrastructure with Brinks. I think Brinks has their regional headquarters there. But so if you looked at Indonesia, Thailand, Vietnam, for example, compared to Singapore, would Singapore be just a natural choice because it has the developed market, the banking sector, the asset management sector, the transport infrastructure?
Absolutely, yes, and yes. Mostly because they've got that free zone area and the infrastructure both in banking and transport. But that's not to say that the rest of Southeast Asia would be left behind, only because I would put up smaller facilities in each of those countries that you mentioned to make sure we could feed the monster in Singapore to get that metal in. I think that is the future. And when we start doing that, then we can really, again, the word decouple from the New York and London stuff. We would travel to the LBMA conference only out of interest rather than need.
And speaking of something else you said recently, you actually said it in the same statement about London and New York not being the future. When you mentioned about GATA, the Gold Antitrust Action Committee, and we a few weeks ago had Chris Powell, the chairman and treasurer of GATA, on the show here. And I'm sure you know a lot about GATA, but what are your general views about GATA, and do you think that they're doing good work?
Yeah, Don Quixote kind of work. They're tilting at windmills that will never fall over, really. I think I got onto them about 1998, and I was late into the game, and I followed them ever since. They saw stuff that none of us knew was going on, and then we suspected it might be going on, but they might all be wearing tinfoil hats at GATA, and then we realized, oh my God, they're right. And now with the stuff that Spencer Campbell, for example, is putting out on his Southeast Asia consulting blog on LinkedIn, we see now that banks and gold companies are being fined billions of dollars for market manipulation. They were right, and we should have listened to them much earlier. And everyone that's in the gold business that doesn't want the price manipulated should probably kick in a few bucks to keep them going.
Yeah, like I was saying to Chris that they should have another conference. The last conference they had was in London in 2011. And he says, well, it's a question of financing. So it'd be great if somebody could finance another conference, because
go fund GATA.
Go fund a crowd source, because they really put on a good conference, and that would really improve their profile again. And it would be a good way of looking back at everything they have achieved in the last 5 or 6 years, especially.
No, it's been amazing. It's absolutely been amazing what they've been able to achieve in the last 5 or 6 years, but they've been at it like dogs for over 20 years. It's just been amazing what they've been able to survive through, because it wasn't a friendly climate for them to be in, and nobody liked them, and they called them nuts and they called them crazies. And with guys like Eric Sprott and Chris, of course, they've made it through, and they've been proven right. And we should all be really impressed and literally kick in a few bucks. I mean, I don't know if they have a membership. I don't know, but if they do, I'm going to join.
Well, I'll pass it on to Chris. It could be a good way of talking about how they could improve their finances in the future. But what's your view? I mean, you've worked with all the refineries and you've come across all the big bullion banks, and like banks like Bank of Nova Scotia and JP Morgan, not only are they pretty heavily involved in the gold industry around the world, but they in some ways dominated in London on the LBMA and in COMEX with the vaults. And both of those banks, just taking some examples, have been recently fined huge amounts of money, multi-billions, nearly billions, but they're still not only allowed to continue to trade, but they're still the core of those two organizations, the COMEX and the LBMA. Is it that they're so powerful that the regulators just can't tell them, prohibit them? Or is it really a strategic political decision that they've been fined, but they will just carry on?
It's pretty clear that JP Morgan or Scotia are never going to ever hire me, so I can speak on those two. Look, Scotia has done an amazing job at building up the gold business internationally, both downstream and upstream. I think as JP Morgan has, they take large risks on small customers, and quite often the bank branch manager in Singapore or in Dubai or in Saudi Arabia has to make some judgment calls, and sometimes those calls go wrong, and then they take a loss. This is on the physical side, not on the trading side or manipulation, right? But they need to feed their monster too. So they take huge risks. So I expect them to take premiums. And the most expensive part of being a gold refiner is paying the bullion banks and paying the transportation companies. Those are your two biggest expenses against profit against the customer. They've been fined billions of dollars. They've been done naughty things. I get it. I understand. But that's more technical manipulating on the trading side. I'm not an expert there, but yeah, they if you're not with one of those two or a select other three, then you're not running a large refinery putting 1,000 kilos through a day. You need those guys on board. I couldn't even get into an LBMA conference without having Scotia sign me a letter 10 years ago.
To endorse you or authorize you.
Yeah, wow. to just join the general conference.
Speaking of the refining industry on a big picture scale, a few years ago, we saw quite a lot of acquisition activity. There was a flurry of acquisition activity where Johnson Matthey was taken over by Asahi, Metalor was taken over by Tanaka, and Valcambi by the Indian company Rajesh. And then Agor Heraeus was taken over by Heraeus, which was already a 30% shareholder, but they took over the whole company. Right. So has acquisition activity died down since then, or is it just that there's no really more big names to be taken over and there's acquisitions going on in the second tier and third tier?
Yeah, I think you've seen the end of it. No one's going to pick up smaller refineries at this point. They've got all the large ones. I think the Agor Heraeus one was just out of convenience. I think the Valcambi one was Newmont trying to get away from the risk of owning a refinery, because Newmont, I think, was like 60% or something like that owner in that. And they're a mining company, not a refiner. And so they decided to get rid of the risk of owning a refinery. They're risk adverse anyway. So now you've got Valcambi owned by the other company, and Newmont is free and clear of it. When you come to Asahi, Johnson Matthey didn't like the gold business. It sucked up too much money for too little profit, because it's not a very profitable business to be in. And they were happy when Asahi came along and just wanted the gold business. And Asahi wants the gold business because they build products out of gold, and they wanted to secure a supply. And you've got the Tanaka takeover of Metalor, and it's almost similar in fashion. They knew that if they had those mines that were shipping to Metalor, they would be able to make all the gold wire and all of the mobile phones and all of the things and connectors that they could make. So these are companies that manufacture stuff that came in and bought these. So I think the acquisition of refineries is probably done, but it was actually a reaction to the acquisition of mines before that, where Rio Tinto and BHP came in and bought up a whole bunch of smaller mines, and then started saying, if you want our production refiner, you need to bid on 5 mines, not just this one mine. And we want a lower price for every mine. And so the margins got smaller, and you got your fixed cost operation at the refinery, and you're going, I'm only making 35 cents anymore on this damn gold I used to make $1.10 on. and you're just barely paying for your employees. And so there was willing sellers out there with big refineries. I think that's all done now. It's gone because they've been scooped up by people that need the production through the refineries to build other products that they make value-added products on.
Well, so speaking of the gold mining sector, I think it was last week, Metal Focus came out with a report saying that next year, 2021, will be a peak year for gold mining. I think they mentioned like 3,664 tons. So when there's an increase in gold mining, that obviously feeds into the refineries. So does that mean that it's next year will be a buoyant year in general for the refineries, or is it more complicated depending on where the flow goes and who
Well, I think if the mine is active, even if the mine is active, let alone buying a mining company that's still in exploration, I think 2021 is really optimistic view of increasing gold flows by that much. But that aside, maybe they know better than I do. I'm not a miner. But when that metal comes in, it'll be bid on by refiners for yearly or 2-year contracts, and it'll go to whoever bids the lowest, who needs the feed. I think the current situation that the world is in, that you're going to see a lot of uptick in investment in mines, and that means a lot more investment in exploration, which means you're going to find a lot more gold and silver and platinum and palladium. But you're not going to see the yield of those investment funds for maybe 2 to 3 years down the road if you're lucky. Nonetheless, the refineries are there. They've got the same equipment. They're as big as they are big, and about 5 people own all of them in the world. So there you go.
So you mentioned silver. I know we were talking previously a lot about gold, but in general, how are refineries flexible enough to shift production between gold and silver, or does it depend on how they've been set up and the equipment and the processes?
On a technical basis, you have to build a silver refinery to take metal from a silver mine. It's a completely different process, but all gold refineries have silver refining processes built in, because gold lives with silver everywhere you dig it up out of the world. So you'll always have somewhere between 4% to 20% silver in placer gold or hard rock gold or whatever. So you're always going to end up with a silver product. So most gold refiners all gold refiners have the ability to process silver, but you can actually build a completely separate line like we did in Abu Dhabi for products that are all silver with a little bit of gold. And so they're really two different animals.
Two different animals. Yeah, because when I came across, was researching the big Swiss refineries, they all say that they have capacity for silver, but it's not really talked about as much as gold. And even the media are not much interested in silver refining compared to gold mining.
They don't have enough capacity for silver in Switzerland. It's just the truth. You walk through their buildings, and I have. You open up storage closets that's supposed to have brooms and mop buckets in it, and they're stacked up with silver. The financing costs are so low that they can't push enough of it through, because they're gold refineries. They're not built for refining silver. When we were in Abu Dhabi, we were able to put out 5,000 kilos a day of fine silver every day, 7 days a week. That's a proper silver refinery.
I had one quick question about your view on the gold price for the rest of the year and into 2021. You think it's going to be a good time to stay long on the gold price and on physical? Is it a good time to be accumulating and getting into physical gold?
So I've always told my kids, my brother, my parents-in-law, all my friends, it's always a good time to get into gold, because it's a storage of wealth, a storage of value, if you will. If in 1939 you had an ounce of gold, you could buy a good tailored suit. In 2020, an ounce of gold will buy you a really good tailored suit. You couldn't say that if you'd stacked a bunch of bills around you, dollar bills in US currency around you. That just goes away with inflation. So I always say buy physical gold. What you need to do is keep it in a safe place.
It's been great talking to you. I think that our viewers are going to get a lot out of this, because it's very rare to have somebody with your expert knowledge on the internet, on a show, talking about your experience. So I think people will get a lot out of this. So thank you again, Corey, for your time, and hope that everything goes well for you for the rest of the year and in 2021.
Thanks very much for having me, Ronan. It's been a pleasure to be here. My poodle looks like he wants to get out of the room now, so
okay.
we'll go. Thank you very much.
Thank you.